Hello everyone. This is the pre-market report video for today, 15th September 2025 for the Indian stock market in terms of Nifty and Bank Nifty. First, about the US market, last Friday, whatever the macro was released was not good. University of Michigan's consumer sentiment fell to 55 against expectation of 58. Just to give a perspective, before Trump coming into power, it was always above 70. Then, in terms of future inflation, after 1 year expectation came same as previous projection 4.8%, but the inflation expectation over the next 5 years increased to 3.9%, which previously projected as 3.5%, which in turn increased the 10-year treasury bond yield mildly like 6 basis points. Despite all these weak macro, US market didn't fall much. In fact, Nasdaq closed positive, all because of the rate cut expectation. Dow Jones decreased 0.59%, S&P 500 was down marginal 0.05%, and on the contrary, Nasdaq outperformed and was up by 0.44%. In case of VIX, it didn't change much, it's still below 15. About oil, on Friday, Ukraine's drone attacked one of the largest Russian oil refinery, which in turn made the Russian government to suspend their largest port in Western Russia, which generally is in favor of oil price increase, but this all poor macros in US created the demand concern, so each other news cancels each other, hence oil price didn't change much. At the time of this video, WTI crude trading little above $62 per barrel, whereas during weekend Brent crude closed at $67 per barrel. Then coming to Indian ADR, as it is only ICICI Bank ADR closed positive, all other major stocks closed negative but less than 1%. Arbitrage wise, for now only Reliance GDR and ICICI Bank ADR showing the negative difference less than 0.5%, whereas the other Infosys and HDFC Bank ADR and Wipro ADR, those three indicating the negative arbitrage difference of above 0.5 to around 1%. In line with that negativity, GIFT Nifty on Saturday morning, it closed at 25,158. Equaling that with the Friday spot market, it's indicating the gap down opening of over 60 points. Other than the info about the US market, all the other important things we already discussed during the weekend, such as Friday very positive India inflation and the trade tension between Trump and China, these two expects to drive the market today. On Saturday, Trump made the post in his Truth social media, and US Treasury Secretary Scott Bessent had the conference call with the G7 countries. Both of them requested the G7 countries to stop buying Russian oil. In addition, they asked them to impose tariff 50 to 100% on China. Even on week ahead video, I made this comment. It seems US-China trade talk is not going kind of, since Trump team are requesting other countries to do their job. And on Sunday, more things have happened to confirm that. Yesterday, China launched the investigation probe on two US semiconductor company for dumping the substandard chip into China. And in Spain, US and China kick-started their trade negotiations. On the first day, both the countries' representatives stated that they discussed about trade disputes, national security concerns, and future of TikTok. So, in the next 2 days, along with the Fed industry decision on coming Wednesday, we could expect this China-US trade talk development also to drive the global momentum and market. Then, stock-wise, we could say Dr. Reddy's and Apollo Hospital will be on focus. For Dr. Reddy's, US FDA completed their pre-approval inspection on their Hyderabad plant, and they gave 5 warnings which Dr. Reddy's has to reply in the next 15 days. And in Apollo Hospital case, they announced their intention to acquire 30% stake in Apollo Health and Lifestyle business. By doing so, it will become a full subsidiary of Apollo Hospital. Honestly, I don't know whether it's positive or negative, but either way, we could say both the stocks will be on focus. As a summary, US market closed mixed, so we could say global momentum is paused or mild negative as it's waiting for the US Fed interest rate cut. And for the Indian market, Nifty closed about 25,100 mark, which is good, but there is no reason that I know that could push further up from the present level. Either we need the India-US trade deal or at least the good earnings results, which expects to propel the market upside, and for that I believe we need to wait at least 20 more days. Here, please note, I'm not saying market won't increase. What I'm saying is, at present, for now, there is no push for the positive momentum to rally further. But in stock market, always expect the unexpected. Market will rally exactly when we think it won't. For now, in line with the mild negative global momentum, Nifty indicating the gap down opening. About institution, last Friday in the cash market, both FII and DII were net buyers. FII net bought for 130 crore rupees and DII net bought for 1550 crore rupees. It seems FII facing the mild selling exhaustion, so let's hope at least now they will turn positive. Then in case of derivative market participant wise open interest, in the index options last Friday 15% new put option and 6% new call options were added. Because the number of put options substantially higher, PCR ratio increased to 1.26 from 1.16. And stance wise proprietary traders from net 1.3%, they increased to near net 3% of their open interest favoring the bullish position. And client or retail traders holding net 5% open interest favoring the bullish position. And on the other hand, FII having net 7.4% of their open interest favoring the bearish position. In case of index future, the stance is same, client holding 71% and proprietary traders holding 59% on the long side, whereas FII holding 88% of their open interest on the short side. Overall, client and proprietary traders expecting the market to go up, whereas on the other hand, FII expecting the market to go down. Then as per stock open interest, NBCC, Godrej Consumer Product, KPIT Tech, Bosch, Colgate Palmolive, UPL and Oprah Realty are some of the 65 stocks that got an increased open interest along with a negative close indicating the short build-up. On the other hand, GMR Airport, Vedanta, Nuvama, Maruti Suzuki, Hindustan Zinc, Bajaj Finserv and Apollo Hospital are some of the 60 stocks that got an increased open interest with a positive price close, which means these stocks got the long build-up. About the things to look out, first early morning China's unemployment rate, retail sales data and industrial production growth rate is due. Then during our market hours, India's wholesale inflation and Europe trade related data is scheduled to release. And in the aftermarket hours, India's trade-related data and unemployment rate is due. Then for US, New York Manufacturing Index are the things we need to keep an eye out today. Coming to technical, last Friday Nifty opened 70 points gap up and sustained above 25,000 mark throughout the session. Then finally closed above 25,100. Thus on the daily chart, Nifty formed a bullish candlestick pattern with both upper and lower shadow, indicating a healthy trend despite volatility. In addition, Nifty is now approaching its August high, a key level that could help negate monthly the lower high lower low formation. Especially the 20-day exponential moving average is on the verge of surpassing the 50-day exponential moving average, and the 10-day exponential moving average is already positioned above both 20 and 50-day exponential moving average. Furthermore, RSI climbed above 60, indicating strength supported by a strong bullish crossover, and MACD also showed further positive trend visible, both indicating continued bullish momentum. Hence, as long as Nifty holds above the 25,000 level, 25,250 to 25,550 range could be the next level to watch. However, if it slips below this mark, 24,800 level, where the 20-day and 50-day exponential moving average as well as the midline of the Bollinger Band converge could act as the crucial support. In case of Bank Nifty, it also opened more than 100 points gap up and sustained its upward journey for the 8th straight session, then closed at around 54,800. Thus on the daily chart, Bank Nifty formed a doji-like candlestick pattern indicating indecisiveness among buyers and sellers. Still, Bank Nifty managed to sustain above its 10 and 20-day exponential moving average and even touched the 100-day exponential moving average intraday on last Friday. RSI maintained its positive crossover, rising to 49.68, and MACD continued to show the bullish crossover, indicating potential consolidation with a positive bias. Hence, looking ahead, 54,600 to 54,500 zone will act as the crucial support. On the upside, 55,100 to 55,200 zone will act as the key resistance. On the options front, the maximum call option open interest was at 26,000 strike, followed by 25,500 and 25,200, with maximum new call option rating at 25,150, 25,300 and 25,350 strike. On the put side, the maximum open interest was at 25,000 strike, followed by 25,100 and 24,500, with maximum new put option rating at 25,100, 25,050 and 25,000 strike. Thus, from options data, it indicates that Nifty is likely to face resistance at 25,200 to 25,500 level, with 25,000 as the immediate support. So that's all in this video. Hope you all got some useful information. Please consider subscribing to the channel and liking the video so that it will help me beat the YouTube algorithm and also motivate me to do more. Please don't make any investment decision based on this, as I'm not a SEBI registered advisor. I'm doing this for me and viewers' educational purpose only. Thanks for watching.